Chair of the Americans Energy Dominance, Sam Romain, along with Mitch Firestein. He's a fund manager and the author of Planet Ponzi. Good morning, gentlemen.
Morning.
Good morning.
So, Mitch, I see you're outside getting some
where are you, Mitch?
fresh air. So let's start with the UN report. What does that mean for Americans and their finances?
Well, look, I mean, I think that we've got growth in America. We've got a mire in Europe. We've got Germany that's been in a recession for 3 years. The United Kingdom is underwater. Most of Europe is underwater because of net zero. Net zero was economic suicide for Europe. When Trump won in his first term, he got energy independence in America, which really helped us out quite a bit. Now, we're seeing a surge in interest rates right now, and the surge in interest rates has nothing to do with it's more monetary policy from the Federal Reserve cannot help generate more oil. Lack of oil is the problem that's causing an energy shock, and interest rates are higher because people believe that interest rates can go up. They can't really go up. I think that they've got to stay where they are or go lower, or we're going to have a liquidity crisis sparked by the Federal Reserve. So I think there's a lot of different components and moving targets here, but we've got valuations in the stock market that are stratospheric and ridiculous.
Sam, I'm curious to get your perspective. We are hearing a lot about what's occurring with the new Fed. Of course, Kevin Warsh is the head of the Federal Reserve now. Many watchers are saying we're due for a rate hike. If anything, we were hoping on cutting rates, but that doesn't seem to be happening because a lot of people, they're concerned about inflation, CPI, PPI, it's going up, and gas prices is causing a lot of anxiety for most Americans. Where do you see this going?
Yeah, I mean, hopefully the rates do go down. But at the end of the day, I think what's really important to remember is that American energy dominance is national security. It is economic freedom for Americans. And Trump is playing a very complicated game of what I will call 5D chess. And everyone likes to talk about 4D chess. This is a really nuanced maneuvering on the geopolitical stage. If you look at the Strait of Hormuz, America is not as affected by the Strait of Hormuz as other nations are, especially Europe, but really, especially China. If we can shut down the Strait of Hormuz and rejiggle the pieces a little bit and make China reliant on American oil, then we need to be drill, baby, drill. And at the same time, we also need to be build, baby, build. We should be looking at how we decouple the American energy grid from gas so that we can export oil and gas to nations like over in Europe or even China and really capitalize on those markets. That's going to drive economic freedom for our country.
Well, you know, the cost of gas may be anxiety-inducing for some Americans as prices at the pump inches toward $5, which is devastating. Some people are actually spending $70 to fill up when they at one point they actually spent $45. So that's almost doubling. We're getting to that point, Mitch. And now we're talking about energy independence, which is good for America and exporting oil around the world. But as you know, Mitch, the oil that America has is known as sweet. And many of these countries around the world, they also buy dirty crude, which has a high sulfur content. So we can't just take, refineries can't take sweet oil and put it into what's called dirty refinery systems because the end product will not be as intended. So they would have to spend millions of dollars to transform their refinery production. Can you break down the complexities there?
Well, look, that's a really complicated issue, but it's not really that complicated for people in America. WTI oil is West Texas Intermediary, which is light sweet crude. Now, the refineries, we have 130 refineries in America, and they're capable of what's called refining that into gasoline. So that for the United States is fine. Brent crude is what most of the global price networks have. They have a decline in refining capacity around the world because of this mad net zero policy. So that's really the crux of the issue here. Not changing the refineries. It's not really that big a deal to do that. But I think that, the point that you're getting at, this is a temporary shock to the system. It's a temporary economic shock that monetary policy is not going to solve. What we need to do, the United States now is the biggest producer of petroleum fluids in the world, bigger than Saudi Arabia and bigger than Russia. So now everybody's going to have to buy their stuff from us. It's going to help our economy. The rest of the world has to scrap this net zero policy, which is insanity. And then economies can move forward and unlock. But we need to get back to realistic valuations in the stock market. Energy and commodities are probably going to outperform tech going forward. And I think that's where we are.
Yeah. Mitch, I'm going to stick with you for this one, and then Sam will go back to you, of course. But Mitch, it's a busy earnings week, and you mentioned tech. NVIDIA today after the bell going to report. Lowe's, Target, Walmart now part of what we're seeing as to this week's tech earnings in general and consumer. But part of the UN report mentioned at the top, it says tech investment may play a role in the projected economic growth in the United States and what it's expected this year. What's your reaction? What can we expect from NVIDIA?
Well, look, NVIDIA is ridiculously priced. Last week, it traded at $5,800 billion in market capitalization. And it's like just ridiculous. We've got stratospheric valuations that are unjustifiable in my view. I would not touch those stocks with a barge pole, wouldn't go anywhere near them. You need to make profits. Look, they want to spend another $10 trillion on AI. Okay, that's great, but we need to see some sort of profits. And when are you going to break even? These companies aren't forecast to break even until 2030. It's just absolute madness, and everybody's chasing momentum in these stocks. Wouldn't touch NVIDIA at these levels. Valuation's far too high. Wouldn't touch the SpaceX IPO either.
Yeah, that's coming up.
I see what you did there, Mitch. You said 5,000 billions. And for people at home, that's $5 trillion with a T. So, you know what? That's very scary, Sam, for many investors. And I heard people say, well, there's going to be more AI investment. That's the reason for the valuations. But you're talking to a guy who actually was reared on Wall Street. And I'm going back thinking about the bubble. I'm thinking about 2008. And I'm getting a little concerned. Are you?
I'm certainly getting concerned, and I think Mitch is right. I think you'll actually see the energy stocks and utility stocks probably outperform tech. I mean, NVIDIA CEO himself basically said that we have the compute, but we don't have the energy. We have a utility problem in this country. We have an energy grid problem in this country that is much more complex than oil refining or energy stocks, that it needs to be revitalized. And now you have thousands of tech bros out of California trying to just jam their way through it. And that's not how the grid is designed to work. We need to drill, baby, drill. But again, I'll say it. We need to build, baby, build. The last time we built a refinery in this country was 1977. And there have been nuclear plants that are stuck in permitting longer than I've been alive. We're not going to solve this issue in the next 2 to 3 years. And that creates a big problem for these tech companies.
Yeah, we have to build not only refineries, we have to build a wall, and we have to build our infrastructure.
Well, here's a look at the inflation rate in the United States. I'll pull that up for you here. Kevin Warsh is set to be sworn in as the new Federal Reserve Chair at the White House on Friday, with his first policy meeting set for next month. Mitch, what should Americans be watching for during Warsh's first meeting?
Look, I think that the Federal Reserve is broken. I think Warsh has his job set out for him. I think it's going to be problematic for him to change things at the Fed because it's institutionalized. They have a dual mandate, price stability and full employment. They've blown that. DEI is part of their picture now. And I think that it needs to be totally restructured, or they need to change the Federal Reserve, the way they look at things, because they caused these problems by printing money out of thin air for over 2 decades of bad policy. It's their fault. They've got to clean it up. They need to cut rates. They can't raise rates because there's a liquidity problem. Private equity's got a problem in terms of these private credit funds. There are big problems out there waiting to surface, and I think that we're going to see that, unfortunately, come forward soon.
Sam, what do you expect? Because we already know how Jerome Powell will likely vote with regard to interest rates. So do you see interest rate cuts in the near future?
I think Mitch has been spot on today, and the system is broken. But what I want to speak to is more the American people. A lot of your everyday Americans don't understand the nuances of the Fed and how quantitative easing works, or printing money. What they see is the kitchen table affordability issue, their gas price, their energy price. When diesel's almost $6 a gallon, that affects everything, not just the diesel pickup trucks, right? And if we can't solve this affordability issue as the Republican Party, we are going to face major turmoil come the midterms, and I'm terrified of what that looks like. So I'm hoping and praying every single day that we can find an answer to the affordability crisis.